All right, hey everybody, this is Ryan here with you again today. Saturday, May 9th, here at home. As y'all know, if you watched my last Landstar load board update, had a couple loads cancel on me due to what I think another carrier, spike in our work down there. But I ended up getting another load. I got a load of ice cream cones out of PA over here, not too far from the house. Unfortunately, it's got 5 stops and it's going to a couple grocery houses, which if you've heard me talk before, I don't like doing grocery houses because if you've been to those type of places, you know how it goes. But it's paying pretty well, $2.70 a mile on the gross rate, load board rate, so I think we'll do all right there and get something out of Iowa where that load terminates. But I kind of want to do a short video on kind of surviving hard times, and I'm going to get into that. Like I said, I watch a lot of other guys' videos out there, and I keep hearing this hammered home. Nobody wants to pay us, brokers, and all this type of stuff like that. And like I said, like it or not, it's my opinion. I don't think that's as much the case. I think it's more of a volume problem, and I'm going to go ahead and get into it. So if you didn't know, I mean, trucking is a cyclical industry, and that's my first point. And there's ups and downs all the time. I mean, it doesn't matter. I mean, we go through this, I put it down here, every January and February. We had that big ramp up, starts like in October. You have a huge ramp up for, Thanksgiving, Christmas season. There's a lot of good freight. Things are really, really busy. Then like the day after Christmas, it just plummets. And sometimes I've seen that up into the beginning of February where it's really, really slow. So you plan for that. My wife and I, we usually plan to take our time off, take vacations in January, beginning part of January, even up into February. And that way, I'm taking my time off and taking a vacation wherever, when there's no work or freight rates are really low because there's nothing going on. So you plan for that type of thing every year. But again, going back to a cyclical industry, is that it doesn't really correlate to the rest of the economy. I mean, it's based on truck volume. So if you've got too many trucks out there, and people are going to take things for less. Brokers, they're going to push things for less, and that's just the way it goes. So it's just like if you've been to an auction. I do a lot of auctions. I go to buying farm equipment and whatnot, and it's a reverse auction. So I mean, it's basically a race to the bottom. You got a guy out here saying, "I'll do it for $2." This guy comes in and says, "I'll do it for $1.75. I'll do it for $1.50." And it just, wherever the bottom is where what you get as the final price. And so I mean, you got to look for trends. Like I said, volume. It's a free market system. The lowest rate's going to prevail because as Americans, we want the lowest rate possible. Everybody wants to pay less and less and less, and that's why we're in a lot of the situations we get into, like with Walmart and buying everything from China, because we want the lowest possible price we can get. We want things cheap. And, shippers, they want, if they can save 20 cents a mile, 10 cents a mile, whatever, that goes right into their bottom line. So, and these types of situations where you don't have a lot of freight benefits them. So, I mean, it is what it is. So, I mean, we can spin it any way you want, blame whoever you want. When there's not enough volume and too many trucks, the rates are going to keep going lower and lower and lower. That's just the way it is. So I've got that in there. My next point, you can't operate on thin margins. Okay, so you maybe even if your costs are 50 cents a mile and you're out here running for $1 a mile, you're basically running as a company driver getting paid 50 cents a mile, and you're responsible for any. So just think, if you're a company driver, you're making 50 cents a mile, but they come out and say, "Hey, if you blow a tire, you got to pay for it. If your turbo goes out, you got to pay for it." So that's where you're at. If you're running for those low margins, you can't afford any major breakdowns or anything out of the extraordinary that you might have to take care of. So I mean, a lot of guys say they can run for this and that, whatever. My costs are about with current fuel prices, I'm at about 75 cents, and I basically got my searches set up right now where I'm getting $1.25 as a minimum, and that's way less than I want to operate. But that basically covers my regular maintenance and tires and stuff like that. It doesn't really cover anything extreme that I might have to put into the truck. So you got to kind of look at that point. If you're going to run for those margins, I mean, run at those margins, you can actually lose a lot of money. Basically, you're going to have to throw if you're not making that much, you might just be making a company driver rate basically. You're gonna have to throw something on the credit card. You're gonna go in the negative if you have a major problem. So that's something that you got to look out for. And at the where I'm at right now, basically with the rates, I mean, I'm not gonna run for that. I'm not gonna take that. It's a lot riskier, and I've saved some money, which is another point we'll get into. And at that point, I'm just gonna kind of cherry pick loads, hang it out, and run less miles, which I don't like to do. And just you just don't want to put yourself in that position to where you're going to take money, you're going to run up your personal credit cards and stuff like that for a cost of repair when you're not making that much money. You're working for cheap miles, basically. My next point, save. At least you should always have at least 1 month of your truck payment, your insurance payment, all your expenses. You should save that up. I mean, I know this may be too late, too little for a lot of people out here in this current situation, and I apologize for that. If you are in that situation, we feel for you. But you need to have a safety net, because nobody else is going to do that for you, and you don't want to go into debt. You don't want to run up credit cards. So I like when those times are really fat. Like, I like to run pretty hard and put that money away and build up a little bit of savings, so that way when there are the thin times, you can sit at home and wait it out. Because there's some time when the rates get low enough, it just isn't worth running. Maybe just enough to just like what I'm gonna do. I'm gonna take this run out there. That'll cover my expenses for another 2 weeks or so. That doesn't come out of my savings, and it's quality miles as far as the rate. So that's the kind of things you got to look for. I like to have a nice set aside to where if I want to stay home for a month, you might even get sick. You never know. The truck might break down. Any of those types of situations, not just what we're dealing with right now with the coronavirus COVID-19 thing, is that you should always be kind of looking out. Like I said, you don't get sick pay here, in the owner operator side. So you've always got to be, like I said, a minimum. I like to have $4,000 or $5,000 set aside, and that's kind of where I'm at right now. And like I said, I'd be pretty comfortable to get through June if I had to at this point. But there's some little stuff out there that I'm going to run. So next point is, and I also didn't admit that also with the expenses, that goes for your business and your personal. So I don't know if you have a spouse that works, and you can kind of bring that into the play. But if they're dependent solely on one income, or you're on one income, with those 1 month of expenses, you need to take into account your car payments if you got one, house payment, rent, whatever you got, and have that all set aside. And this, like I said, when times are fat, put that stuff, just put it away and forget about it. Whether you get a money market or savings or checking, whatever you got, or throw it in cash in the safe. Just to get you through a hard time, because there's nobody's gonna bail you out here. And like if you got a lease truck, I mean, I was in with SFI trucks once before, and they're gonna call. I got a buddy that's still with them, and they're gonna call you. They're gonna want their money, and they're gonna come after you for those type of things. So make sure you, like I said, you got your business and your personal covered. Next point, maintain your equipment at all times. Keep your equipment up to date. I mean, I do a lot of maintenance videos. I save a lot of money doing that. Doing my own maintenance, and I'm happy to do. I mean, if anybody's got any requests on certain things, I'd be happy to throw that out there if you're interested. And I save probably on average 60% or so by doing my own stuff with higher quality parts than what somebody else is going to provide to you. So, like I said, keep your equipment up to date, up to all maintenance specs. And so then when there are tough times, you're not gonna have to worry as much about it, because the worst thing is gonna be when rates are really low and volume's really low, and there ain't no work. If you have to do a bunch of work on your truck, or if you're gonna take some time off and you've got that money saved up to do maintenance when the times are slow, then that's a good downtime to actually do the maintenance on your truck. So that's something you got to take into effect. I mean, like if you're not a vacation type of person and it's slow in January, shut the truck down for 2 or 3 weeks in January, February, whatever, and get the maintenance done on your truck. So even if you're relying on shops, because shops can be treacherous. I mean, sometimes they'll tell you it's going to be in there for a day and it's there for a week. So that's when things are slow is a really good time to get maintenance done on the truck too as well. So keep that in mind. Like I said, January, February's are sometimes slow. I've seen it slow all the way out to February. Get out of the comfort zone, and I've talked about this in my prior Landstar videos, where you don't want to rely on the same customers. I mean, you have your area that you want to run, but sometimes you're not. I mean, we like to do what we want to do as being owners, and sometimes you don't get to do that if you want to stay successful. Like I'm going through that right now. I run nights. I hate running days. I have kind of a high anxiety. I don't like a bunch of people around me. I'm more comfortable running nights, and I try to stay away from running days. And when I do have to run days, I don't like it at all. I mean, it's just, it's not for me. So some people are probably the opposite with running if they have to run nights. But, and especially with I took this load that pays well, I don't like going to grocery houses. So it's not something I want to do, but it pays pretty well for 3 days. I mean, I'll probably make, $1,800, $1,900, because there's stop pay associated with that I get a higher rate at. So that's something else you have to look at. I mean, if you're dead set on run one area, I mean, during tough times, you might have to broaden your horizon and get out of that. So that's, like I said, I'm in that boat where I'm comfortable. I like to do long haul stuff. I like to run West Coast, and like I said, I like to run nights. And I've had I was on the load board yesterday, and I showed you guys kind of a video, and I had to add a couple more states in there to get the load that I wanted. And I don't want to do that, but if you want to keep moving and make more money, then that's what you have to do sometimes. And book premium freight. Let this cheap stuff sit. I mean, I said that before. I mean, just look for the higher paying freight's out there. You just got to look for it, and you got to wait. If you're on Landstar board or wherever you're at, on the Landstar board, I set up my searches, and you got to wait for the emails, and you got to be very, very quick. And that's how you get the better loads. I mean, sometimes you see that email pop. Sometimes I might call 2 minutes after the posting has been up, and I was too late. So, I mean, there's good loads out there, but you gotta be quick and you gotta be watching for them. Don't always rely on past customers, and that was kind of the situation I got into here with this cabinet load down in Kentucky. It's been this agent and this account, they've got a couple different plants here, eastern side of the Kentucky, PA, here in Ohio as well. They've been good accounts for me. I mean, they're not my bread and butter, but they're good accounts. I mean, if I can grab one up, I'll grab it. But and they're usually very dependable. I've never had one cancel before, and this one canceled. And I had already booked, because I was so confident about it going, that I had already booked another load, and because it was terminating out in Los Angeles, I had already booked another load from Los Angeles to Salt Lake City, a FedEx load that was paying pretty well. And I was if you watched my other video the other day, I was kind of disappointed, kind of down, because I hate having to call an agent and cancel, tell them, yeah, this load didn't go through, I can't find nothing else. And I don't want to let people down, disappoint people. And I wish the agent that I was dealing with on that load would have called me sooner. But like I said, they act pretty distraught at the time, and it seemed like something was going on behind the scenes. And that's why I'm kind of thinking that we had a mega carrier. There's a couple of those into that location down there. I've seen them there before. So I don't know if somebody called in and said, hey, we'll do it for $1.50 or $1 or whatever they did. But it seemed like there was something going on behind the scenes there, because the agent that I was talking to was pretty distraught. So don't always rely on those accounts being good. So I like to switch it up. I mean, I have certain criteria that I like to stay in, that I like to, like I said, I like the nights, I like the long runs, I like the West Coast, I like, long runs, all that type of stuff. But sometimes in difficult times, you've got to get away from that and do stuff that you don't want to do, even though it's your business. But if you want to stay running, keep money coming in, and progress your goals, that's just the way it is. So if you got any questions, we'd appreciate it. I'd be glad to put my input in. I hope that helps out. Like I said, that's just my 2 cents, and might not work for everybody, but I hope it might help y'all out if you're kind of new, or maybe you're not new. And but if you like the video, like us, subscribe, and we'll put some more out.